the carbon premium beat, pricing climate risk into internal fund transfers, the ghost in the ledger. Analyze why traditional capital allocation is failing to account for the 2020 surge in carbon taxation and climate-driven inflation. Explain the disconnect between abstract corporate net zero pledges and the actual daily flow of cash within a firm shift of perspective from viewing carbon as a regulatory burden to viewing it as a fundamental cost of capital variable. The rhythm of internal transfer pricing introduced a mechanism of embedding of carbon premium directly into the internal interest rates used by treasury departments. Detail how this pricing beat creates an immediate financial feedback loop for project managers and department heads. Illustrate the transition from retrospective reporting to real-time carbon adjusted profitability metrics on the balance sheet. Sinking cost of funds with emissions intensity. Break down the formula that scales the cost of internal loans based on the specific carbon footprint of the proposed investment. Discuss how this high-fidelity data allows firms to outcompete peers who are still using flat interest rates across diverse asset classes. Demonstrate how rewarding low emissions projects with cheaper capital creates a natural institutional dry core decarbonization. Demonstrate how rewarding low emissions projects with cheaper capital creates a natural institution, no drive toward decarbonization. Harmonizing resilience and ROI. Case study of how a carbon adjusted transfer price prevents stranded asset risk by pricing in future climate volatility to ensure the mathematical relationship between low emission in long-term institutional stability in a volatile 22Cs market. Address how the strategy aligns shareholder demands for dividends with the urgent necessity of planetary boundary. The new standard for institutional deployment project, a competitive advantage for firms that adopt this rhythmic pricing model before global carbon markets tighten further. Call for a shift in leadership mindset where the CFO and the sustainability officer operate from a single unified ledger. Finalize the vision of a financial system where every dollar deployed is synchronized with both profit and climate reality.